Okay, folks, welcome back. This is our weekend edition for November 2nd, 2019. This is our economic calendar. And just as a reminder, going forward, I'm just going to be posting this on the forum in a post. That way you guys can refer to it. It's something you should be looking at anyway. It's just going to save me a little bit of time going through this. You can all read, obviously, so you don't need me to just read out what's on the screen. It's just basically redundant. But for Monday, we have the ECB president speaking high impact for a very late afternoon, 2:30 p.m. On Tuesday, the London Open, towards the end of it, GBP services PMI. 9:30 a.m. we have high impact Canadian dollar trade balance. 11 a.m. we have ISM non-manufacturing PMI for the dollar, high impact. On Wednesday, we have a medium impact speaker for the dollar index at 9 a.m. 10:30 a.m. we have another speaker, medium impact for the dollar. And tentatively for Wednesday, the autumn forecast statement, medium impact for GBP. 11:30 a.m. medium impact crude oil inventories. That is a short-term intraday setup that you can study through the Canadian dollar. So be mindful of that for Wednesday, 11:30 a.m. Look for a potential low resistance liquidity run. On Thursday, 6 a.m., we have medium impact economic forecasts for the euro. And 8 a.m., New York Open GBP high impact inflation report, official bank rate votes, and monetary policy summary, and asset purchase facility, medium impact for GBP. So, and then at 8:30 we have Carney speaking high impact. So there's going to be a lot of volatility on Thursday's New York Open. So that's going to be the heavy hitter for this particular week. And on Friday we have high impact Canadian dollar employment change and unemployment rate, and a medium impact speaker at 9:30 a.m. for the dollar, and at 11 a.m. we have preliminary consumer sentiment. Okay, so let's go over to the charts and take a look at things from the technical stance. Okay, folks, we're looking at the dollar index. This is a daily chart. And we are approaching a run below this low we've been looking for, and an attempted run into the sell side liquidity pool here. Remember the balanced price range in here that we're seeing the fruits of a high resistance liquidity run. We have nice deep retracement. The imbalance here, the SIBI, sell side imbalance, buy side inefficiency. All the bodies were essentially inside of that. We wicked a couple times through that. Created SMT divergence between the highs here versus the lows on the euro, which is the reason why I've been focusing primarily on euro versus the British pound. Going back to dollar index, some of the things that I mentioned in previous recordings in the commentary, referring to this gap here, I mentioned that I would like to see, and I say this a few times periodically, I would like to see certain gaps remain open. And traditionally, you guys are really familiar with me referring to fair value gaps, SIBI, BISI, the imbalances that are created by fast directional moves in the price action, and we anticipate those to be rebalanced. The nature of a market that remains imbalanced, in other words, if it doesn't have to come back up here, this is very useful because it acts as a indication in terms of magnitude, and it also promotes a better understanding about how fast a market should move. Okay, now I kind of want to contrast that with the high resistance liquidity run characteristics that I've been talking about for a couple weeks now. We have a balanced price range in the dollar index with this back and forth price action. The fact that this is going to be, and as we've already seen, a formidable area to get through, if we get this gap in price, it kind of overshadows the balanced nature of this range. Okay, and this is the reason why I said I would like to see it happen. and I'll explain further. If we're unable to get back up into this area and rebalance it by going back into it, this would constitute a breakaway gap. Now, what does that mean? Price has broken away from this larger trading range here by breaking lower than these lows here. We're unwilling to get up into this fair value gap and enter again this balanced price range. Okay, so remember these equal lows, draw that out in time. Price hit that and then fell. So if this is indeed a breakaway gap, and I believe all indications are that it is right now, if it stays open, it's an indication or a signature in price action that this balanced price range may not provide as much resistance on the way down as we first hinted at, or at least I did. Okay, I got to own up to this, right? I'm either right or I'm wrong, right? But the balanced price range, I said it was going to take time to get through that. We saw a nice bounce in here, but it went to areas that were logical. The bottom of the balanced price range here, looking for a potential run back up into this. And if we traded back above that, then we would have to consider that there was maybe an intermediate term low has formed, and maybe we would return back to a longer term uptrend. Those indications are not there. Okay, some of you were anticipating this as an all-out reversal, and you're seeing that that's not the case. And this is the reason why I teach you not to trade tops and bottoms or pick tops and bottoms against the intermediate term and long-term trend on institutional order flow from the daily chart. You have to stick with it and trust it. And it's very hard to do that. I understand it's very difficult because you are trying to capture the precise turns when you don't really need the precise turns. You just need those moves in between. Let the smart money cap the market on the high end and then the low end. And then you use rebalancing, order blocks, internal range liquidity to trade with that institutional order flow. Let them take the risks. Let them be the smart ones in this game. We can go in with low risk, doesn't mean risk free, but we can go in low risk opportunities trading in line with that. Okay, so a lot of you are new and you're starting with me month 1, month 2, maybe you're less than month 4, and you're growing impatient because you feel like it should click for you faster. Like you should know how to do this by now. And you forgot that this is 12 months of core content. And then you have to work with that core content in price action models. And in 2020, we do the actual fleshing out of the trade plans. So it's unreasonable and unrealistic for you to assume that you should be able to do this right away simply because you've been here a couple months. That's not normal. That's not reasonable. Okay, so some of you need to be reminded of that. And I don't mean to be curt, but as an educator and your teacher and your coach, if you will, I have to remind you of where your realistic expectations should be. And they should be with sticking to the process of looking at what we do every single week, seeing the multitudes of it panning out, and the few times that we don't get it right. I don't get it right sometimes. And sometimes we have to wait for those things to give us more information, or wait for those things to pan out over a longer period of time than we would most likely want to see it do it. But in relationship to this gap, why is this a breakaway gap? Or why would I expect this to be a breakaway gap? And when I was seeing this return back here, we were focusing here primarily, but if we went above it, our attention would be right in here. If it stays open, that will overshadow, like as I mentioned, and more or less take precedence over the balanced price range nature of this area here. So what am I saying? Since this stayed open, okay, this is most likely to come down through this existing range below this low all the way down in here. A little bit less resistance should be there. It doesn't mean it's going to be that very thing in price action. It just means that it's more likely to do that now in terms of high resistance versus low resistance liquidity runs. Initially, this was a high resistance liquidity run. Now, because we had a breakaway gap here, that indication is this is probably going to be a whole lot more heavier and far easier for price to run through this balanced price range into the sell side liquidity pool and this fair value gap here, BISI, buy side imbalance, sell side inefficiency, because of this unwillingness to get back up here and rebalance, where it would normally do that. And we see that on all time frames. We see a plethora of that. There's a litany of examples I've shown in the past months where you can just simply see it happening all the time. When it doesn't do it, and you have a directional bias already underway, it really helps promote a more speedily, more fluid response and price action, whereas we normally would have expected, even though we came up into an area of rebalancing, had a couple of wicks, SMT divergence, yes, we expected to trade lower, but we don't expect it to trade like this, okay, this movement in here. Now, because of the gap in here did not fill, not even on the cash basis, because this is the futures contract basically mirroring the December contract of the futures contract of dollar index or dollar futures. Because it didn't fill that, it shows an unwillingness to get up to an area but would be reasonable to see it go back up to rebalance and then go lower. Since IPTA was not willing to go back up to this area here, it shows that it's really tipping its hand, if you will. Okay, understand what I'm saying here. This is not a 100% panacea, be all end all. It just means that if we have conditions like I've outlined here for the last couple weeks, we have a balanced price range. We are expecting these equal lows to be taken anyway. We were not expecting a low here and a reversal. We were not expecting that. Okay, we were expecting just a retracement and a hard time getting down here, but yet still trying to get down there. That's what the analysis and that's what the focus has been. Because up until recently, a couple weeks ago, we've been studying very easy low resistance liquidity runs, things that are very easy to spot, very easy to trade. To make it better for your analyst side of what you're doing in terms of charts, you have to understand and really appreciate the contrast between the high resistance liquidity runs and the low resistance liquidity runs. The fruits of being in this mentorship is understanding how to spot low resistance liquidity runs, but also identifying when a high resistance liquidity run is there. Now, it doesn't mean you can't trade it. It just means if you're going to be trading it, you have to be a whole lot more patient and also be willing to possibly be stopped out, because you'll get a lot more deeper retracements that could otherwise look like all out reversals when they're not really there. They're just deeply retracing to knock out liquidity that's already been in the right, basically right side of the marketplace, and then they take those individuals out and absorb that liquidity, and then it resumes going lower, but just over a longer period of time. Because this has not filled, just think of where we're going now in the next coming weeks or so. We could be coming down into this area a lot faster than we originally outlined in our reviews. So just know that this is the reason why I said that I would like to see it remain open. Normally, if this was not a high resistance area, if it was like a single V bottom, like a single area like this, okay, but not like a range where it's bouncing back and forth, back and forth, this is going to be a high resistance liquidity run if we're above it trying to get below it. Same thing here, okay, trying to get below that. This low would be easy to get through. You can see we've already outlined that and talked about it in detail. Over here, different picture, because we spent more time. This is the key, okay? It's not the fact that we spent the range up and down, it's the time it has spent doing this very thing, okay? Inside this range, it's spent more days versus this area here, where it only went down one day and then came back up and started moving out. This is not a balanced price range, okay? It's rebalanced in the sense that we had a SIBI, but it basically reversed and come back right through it. That's a different kind of balance. The balanced price range is going to be a condition in the marketplace where a defined price range is going to impede speed of the market going through it, unless you see things like this where a breakaway gap is in play. Okay, it's there, and this takes precedence over this. Okay, so it becomes likely to see this type of price action now over here to the sell side liquidity pool, whereas if we did rebalance and come back up in here, it would go back to what we had expected originally, which would be a slow, lethargic grind down through this range to get to the sell side liquidity pool. Okay, so hopefully that made sense to you. If you didn't, just listen to me say that part again a couple times, and it'll make sense to you, especially if you've been here for a while. If you're new, it won't be that clear to you because you have to learn some things, but it's still in the reviews and in the content. Just trust me. I just know there's a lot of new people in here. You're gonna be like, I gotta send an email. I don't know what he just said. Trust me. Go back through all the reviews and the commentaries, and you'll see exactly what I'm referring to, because I talk about all these things before it happens. I talked about like how I wanted to see this gap stay open. The reason why I just outlined. Now that we have it there, I'm telling you what we should expect to see. Okay, it's one thing to expect the market to go higher or lower, but it's altogether something different when you can anticipate the speed, the magnitude, the velocity of how fast it moves there. That is a signature of mastery. Okay, you understand what you're looking at. You understand price. Anybody can go in there and say, okay, I think it's bullish. I can think it's bearish, and come back 2 days later and say, see how smart I was. That's totally different to what I'm teaching you to be. I'm teaching you very, very specific things that are going to help you identify certain conditions in the marketplace. Doing it week after week, you're going to see what conditions that you and your personality are going to like more. Whereas I may trade and operate in just about any time frame in any kind of environment, you will kind of like get a sweet tooth for something that you really find easy. And don't be afraid of using that term easy, because that's going to be the first thing you gravitate to. And generally that's going to be, for the most of you rather, it's going to be your repertoire. It's going to be your niche. It's going to be your thing that you do as a trader. Now, others may start there and then outgrow it and go into something different, and that you have to be flexible with that too. But your first movement or gravitation towards a specific condition and specific environment in the marketplace, don't resist that. Okay, pursue it, because that is what your psyche in your brain and how you're internalizing these price movements, those things are going to be important to you. They're going to be more salient to you as an analyst, which will eventually lead to you taking the trades using that idea. So just know that this is the benefit of doing it. I got a couple emails from folks saying, why am I spending time talking about high resistance liquidity runs? If that's not what I'd like to trade. If you have to know, navigation. You got to know how to navigate through these marketplaces. There's a lot of times, if you watch what I do on Twitter, go back and look at some of my posts where I say I'm not doing anything right now because it's nothing here and nothing happens. And then all of a sudden I'm interested in the markets, and the markets create these big moves. And then everybody will come back, well, not everybody, but a few people come back and say, how did you know that? How did you know that? Well, you're learning how I know that. You're learning signatures. These are things that you need to understand. They're going to help you navigate price action. And then you'll know what you're looking for in the right environment. And then your odds of success go up in perpetuity. It's just like huge advantages that would otherwise be not available to other traders because they just simply aren't trained this way. Okay, so just, it may not make sense to you now because you're new, but trust me, spend a couple more months here and you'll see the difference of what I've been contrasting here. Okay, so anyway, we're looking for lower prices. We're looking for these equal lows to more or less unfold this week. That's what I'm expecting, and because I expect it this week, only on the basis that we have this breakaway gap. Had that not been there, I would tell you it may take longer than this week coming to get down here, whereas now I don't feel that way. But below here, we're focusing on this BISI. Okay, so just know that this is the next area on the downside. Just know that it can happen a lot more quicker than we have been anticipating. But that's what we're looking at. And then we have the relative equal lows here and then over here. Okay, so it can get real interesting, get that back down into the low 95s and high 94s. It can do that pretty quickly now because of this gap. And yes, it seems like a whole lot leaning on that one little thing here. okay? But you're learning. I'm just telling you, this is what happens. All right, so I don't usually go down to a lower time frame on the dollar, but we're going to do it here. The equal highs, it ran through that, and then we had a volume imbalance right in here. Okay, you were probably noticing what that little blue shaded area was on the daily chart. That's what I indicated here. This run up into that area, rebalanced. Look at the bodies, filled in all of this where there was wicks that traded back and forth in here, and we had a little bit of wicking in here. There really wasn't a lot of volume and of trades offered there, so it did that. It rebalanced. This is a beautiful illustration of what a volume imbalance is and why it's important. And it also runs a buy side liquidity pool here, and then we had a nice reaction. We have another volume imbalance right here, so I would expect if we gap up, if we trade into this area here and then start to sell off, that's really good. If we trade at an opening that's relatively unchanged and then trade up into this area, I like the idea of it filling that area and then going lower. That's what I'm looking for. Okay, otherwise we're not interested in anything else on a lower time frame for the dollar. Moving on into the euro dollar. Okay, I mentioned we were probably going to come back down and refill this if we didn't get a specific buy side run, and you'll see that in my notes in the charts in a couple minutes, but it's also in the recordings prior to this one here. We rebalanced in here, spent a couple days in here, and then reaccumulated and then sent it higher. Buy side liquidity pool rests just above this high here, and then the next buy side liquidity pool is here and then up here. I really like this one. I think we're going to draw to that one ultimately, get back up into the high 12s, maybe pierce 113. We had a institutional order flow entry drill here. I know that's a tongue twister, but if I say it in an abbreviated term, you'll be like, what is that? But the BISI in here, the fair value gap, the low is 111.31. It needs to trade to 111.31 or less, and it does the 27.9, basically 28. We trade through it and then we reacted there. So if we drop into a hourly chart, we can see that also is reaching down and almost completely filling this one here on an hourly chart right below here. See that? And we had a nice reaction, popped up, attacked the buy side liquidity pool, but left this one here. If we come back down into this area, which is not necessarily needed, but we have the bullish order block here. If it trades back to the open on 111.30, we might get a reaction there. I would like it not to do that. I would like to see it just run away and not even come back and rebalance, leave that open. That's what I prefer to see. Down in here, basically almost went down to equilibrium between the wick high and the close of that daily candle on the daily chart. That's what these levels are, and dip down right into that. Really neat. I'm going to go over to the 15-minute time frame that has my notes and scrunch this up a little bit. All right, and there we are. So this was that area we were looking for to run on the ECB news, because it didn't do that. It dipped down into the fair value gap on the daily. That's this green line here. Okay, the top of the fair value gap and the low of the fair value gap. All of that running in here. That's all this price action. We whipped through it, whipped down through it again, whipped down through it again, and then reacted, traded back up. Price trades back down into a BISI, creates a sell side liquidity pool here, non-farm payroll. We punch down through that and then expand up through it. We have a small little fair value gap in here. On Thursday, it refilled that, then rallied again. Took some buy side liquidity above these relative equal highs on a lower time frame. Then we had the non-farm payroll circus act, where it trades down, consequent encroachment of the BISI, and almost completely full, and then reaction. So we have buy side liquidity resting above Thursday's highs, and we'll be expecting that as a run on liquidity for euro dollar. Go back and watch Wednesday's recording, because you'll see me trade on Tuesday. I did a recording of that, and the two shorts I did here, one went to target. Well, it didn't go to target. I was able to take a partial below equal lows, and the other one I left running because I wanted to see that a little bit longer term daily. Let's refer to it here with charts, because I know you'll probably be confused if I don't. I said we could possibly go down here if we break through here, and that was the other position that ultimately came back and stopped me out here. So that was stopped out. And then I went long based on the things that I outlined in that trade. You can, again, listen to it. It was on the tail end of Wednesday's review. And I outlined it as I was going through it. And buy side liquidity pull. And then I was looking for the fair value gap here to offer me an opportunity to take the final limit exit. Then it traded all the way back down. And I said that this would have been an area that you could expect to see it go higher. And again, because you're looking at this and thinking, okay, well, why didn't you trade? I didn't trust it personally, but obviously because we have the benefit of hindsight now. And I feel awkward saying it because I've had so many people more or less attack me negatively that are not in our group. Well, we do have one in our group that still thinks he knows something, but he doesn't. But the negativity has left an impression on me where I feel a certain way now when I say certain things because I overthink it now. Because I'm trying to read or forecast your interpretation of what I'm saying. And it may be something I have to work through in a couple more weeks or a couple more months. But the honest point I was trying to show you is I didn't have the trust in taking this long in here ahead of Thursday's price action. I didn't have it. And I wanted to see if we would get a little bit better conditions in the marketplace for me to trade within this range here. I wanted a little bit more of a retracement, and it didn't give it to me. So this was something in here that I paper traded and practiced on the sidelines. And yes, it would have got a target here, but I would still be ultimately long, and it would have stopped me out with this rundown on non-farm, which is the reason why I have the rules. We want to take our trades and enter them by Wednesday's New York Open. Nothing new beyond that. If we have open positions, we can manage them. But this is typically what I end up incurring if I trade outside the rules that I share with you openly. And even on Twitter, I've shared it. Like, we don't want to trade. And I do that because it's protecting. I care about all of you, even the people that don't pay to be a part of the mentorship, people that are trusting me to learn something. I take a great deal of responsibility in regards to, I know what people are going to do if I say something. They're going to react. They're going to do something, okay? And it's not what I'm telling them to do, but they're going to say, okay, if he's bullish on this and you think this order block is good, without me saying what they're going to do. And that's not what they should be doing. So I give you the rules in the mentorship with more detail and tell you the reasons why. And this is exactly the reason why that rule on non-farm payroll week exists. Because if I trade down here, say I would have got filled using the consequent encroachment, okay, great, wonderful. And I took partials up here, great, wonderful. I would have gotten stopped out. My stop wouldn't be at this low anymore. It would be below here. But either way, I would have been stopped out. And then I would have not participated in any move here, and I would not be positioned for anything that takes place on Sunday's opening going into Monday and Tuesday, if it does in fact go higher. So you have to have rules, and some of you are new, and you hear me say certain things, and then you see other moves occur, and you'll say, well, why didn't you catch this one? We're not in the business of trying to catch every move. We're trying to capture very specific low resistance moves in price action. There's moves that I could literally make a video series of YouTube videos of every single move that I'm not participating in, but I can see happening. I let a lot of things happen, and you're going to do the same thing. That's normal, okay? You're not in here to try to capture every single move. I did that kind of stuff, and while if you're really watching what you're doing, you can parlay an account up very quickly, okay? Build it up very, very fast. But also, if you don't know what you're doing, you could burn your account out and yourself very quickly. So try not to have these ideas in mind where you want to be doing something every single time. You want to be limiting your focus to a very high probability, low risk scenario and focus on one of those per week. Okay, you want to do that for a while. And over time, because of that experience, you'll be able to take that whole thing that you've been doing to find that one weekly setup. You'll be able to apply it to an hourly chart. And how many hours are in a week? There's a lot of them. So every hour there's something to do. You can practice with a 1 minute chart using a 1 hour chart. There's always something to practice in there with. It's not about making money. It's not about capturing pips. It's about understanding how the delivery of price occurs. And these things that we study are happening all the time. And what's going to happen because you're doing these things and because of the experience that you're going to capture by doing it with me every single week, it speeds up your learning curve and it filters out all the things that you're still trying to invite into the equation. Well, you didn't talk about this. Oh, he didn't talk about that. And look at this, it moved here. And he didn't talk about that pair. And look how much it moved over there. And look what it's doing over here in the pound yen. And look what it's doing over here in the whatever the weird crosses that other people want to look at. I don't care about those because I'm not going to get tax treatment trading them. I have to trade with dollar-based pairs to get the tax treatment. Let all these people think they know everything, okay? I'm not worried about them. You're here to learn a skill. I have that skill for you to learn, but you have to submit entirely to the process. Don't invite or try to invite your opinions. Don't try to bring in your tools. I'm trying to learn how to use this with my favorite Fibonacci harmonic patterns. Don't even bring that here because I'm not going to entertain it. I don't have any faith in it. I've traded this stuff before and I've made money and I've lost money using it. I've lost more money doing it than I did using it and making money. Okay, the things that I'm teaching you now have nothing to do with harmonics. They have nothing to do with any of those things. It's the actual truth on how price is being delivered. And the only way you're going to appreciate it is by taking everything else out and focusing here. If you're trying to do other things, you're not going to learn as well as you would be if you just gave 100% of your attention to this. You're paying. You're paying money for this. Why are you diluting it? Because you're not going to get the results you think or would expect. If you're expecting it to be, superior results, you can't fault me for that because you're trying to introduce other things. I will promise you this. If you stick to what I'm teaching you, you will understand how price is going to move before it happens. Now, notice I said that, not you're going to all going to be millionaires. Okay? Because just because you understand how price is going to move, because there's a lot of people in my mentorship from the first group, and some of them are slightly arrogant now, and they think they know things, and they invariably want to send me things, tell me what's going to happen. And the more they beat their chest, the more times that they're wrong about those very things. And the times when they're humble about what they're saying, they pan out. Now, what would be happening if those individuals were putting real money behind those ideas? They would have the same reactions and results of a retail trader trading Fibonacci and Bollinger Bands, blaming something other than themselves. Try not to get too ahead of yourself, okay? Some of you are just really antsy to get to the end of this thing, okay? And none of the people that are here, the earliest students, are not where you think you're going to be at. There's still stuff to learn. That's what you're part of. You're in a community. And none of this is wasted time because I'm telling you things before they happen. You're seeing it happen. So this is how you get experience. And I'm using my experience to keep you from hurting yourself trading with live funds. And I'm also telling you where certain things are going to happen and why they should happen and why they should trade that way. You don't get this from other people. Okay? All the reputable people out there that do services and such, they are not going to talk to you and outline these things before it happens like I do. You want to know why? They can't. Because if they could, they would do it just like this. And it sounds arrogant, but it's confidence. I know because I have sat in other people's services. I paid money, years and years of stuff, testing things and listening to other people. And none of that stuff works. They have hit and miss type things. They don't have a continuous way of digesting price action and knowing when not to do something. Because they offer a service, they feel like they have to always tell you, okay, we're going to be doing something. And that creates a problem. Whereas here, you have to be a mature person and appreciate when I say we're doing nothing. Because that flies right in the face of, well, the markets are still trading. Why aren't I trading? Why aren't you talking about this move? Because that move doesn't line up with where all of you are in terms of your understanding. You've watched me do it with an account. I can find anything I want in a 1 minute chart. I can do that. But I don't want to be babysitting a 1 minute chart. Some of you probably want to do that because you see me do it. And I wish I wouldn't have done it because of that reason, because you're cheating yourself from a learning experience that would otherwise be beneficial by never trading a 1 minute chart and trading on a 4-hour chart. You have to go through these things to get that lesson. And I can't do it for you. I can only tell you, do it. And if you don't listen. If you want to be rebellious, you're the only one you're hurting. You're the one that's slowing yourself down. I'm not slowing you down. Believe me, I've given you a ton of information, a ton of things to practice. And you're just looking for new setups. You're looking for new trades. You want to be making money. And that doesn't happen unless you understand what you're looking for and knowing when to get in the market and when to stay out of it. When to anticipate big moves. When to anticipate quick, fast money moves. That's the nature of a low resistance liquidity run. But if you don't understand or appreciate the approach that I'm teaching you with, it's only because you don't have enough experience losing real money. Because if we like able to be in a room together and I was able to poll every one of you and say, okay, who's been here trading longer than 5 years? Okay, who's been in the market trading 10 years? And who's the people in here less than 2 years experience? The majority of you would be less than 2 years experience. And these same individuals are the ones that I get the majority from in terms of email correspondence saying that they expected to know this or that by now, when none of that was promised. And there's other things that's being delivered. And then you have the other folks that have gone through losing lots of money, trading other things, years and years and years of trying other things outside of what I teach. And they're over the moon. Okay, they can't contain themselves with what they've learned because it's created an opportunity for them to more or less impose a measure of self-control that they otherwise wouldn't have. Knowing when to sit still is really important. There's always a trade every single day. You can always trade. Every single trade can be taken at any given time during market hours. But that trade doesn't necessarily mean that you should be in it. You can make an excuse for anything, but there has to be a reason for you to be getting into the marketplace, and it has to be a high odds condition for it to pan out. And that's the basis of why we have been contrasting high resistance liquidity runs versus what we've been looking at since month one delivery of the core content, which is low resistance liquidity. By being able to know the difference between the two, it gives you a well-rounded perception of price action, and it gives you a throttle, okay? When to turn up the activity. Well, when we're in low resistance liquidity runs, real easy trading, real easy. When we're in high resistance liquidity runs, dial back your frequency. In fact, it's probably better to not trade and teach yourself to let these slow runs, and sometimes they move and they act a little bit quicker than you expected them. Don't be upset about missing that, because everyone else does that. Everybody else does that. Oh, I wish I would have traded that. I wish I would have done this. I wish I would have done that. And what they've done really is they have lost mental capital that they never put on the line at all, because they never saw that move happening in before. But now they're saying, I wish I would have saw that. Why would you even waste time saying things like that? I wish I would have saw that. You didn't talk about it before it happened. It happened. So you wouldn't have been able to participate in it anyway. But they're toxic. These people think like this because they don't have a plan. They don't have the basis of understanding when a market should move. Not because it's going to go up or down. Is it going to go up explosively? Or is it going to be a slow, steady, lethargic run higher? Or is it going to be a stair step, up, down, up, down? There's characteristics in price runs that you need to learn, and that's what you're learning from me, okay? The things I say happen after I say it. That's the key, okay? I'm telling you what to anticipate, how they're going to perform in price, and it does these things, okay? If I didn't understand what I was doing, if I didn't understand what I was talking about, I wouldn't be as accurate as I am. I'm not 100%. I'm up there, really high. And you're not going to require 90% to do well. You don't even need 70% to do well. 65% accurate. If you have the right model, you can be ridiculous with that. And think about it. You're saying that you're going to be able to weather 35% of the time you're wrong. You don't think that way coming in here. You want to be 2% wrong. And you never really want to see that 2% wrong. It's unreasonable. So your expectations need to be grounded and focus on the things that we're talking about each week and where your focus should be at, which is one of the other questions I got recently. It was a charter member. So what should someone be focusing on right now? And I guess you guys get a little bit added benefit by knowing that this is a charter member inquiry. The gentleman asked, hey, look, I would like to have 4 or 5 things that I should be really focusing on right now. And I would just basically say this. Focus on what I'm telling you to look at in the market reviews. Don't look at any other pairs. Don't look at any other markets. Don't look at any other directional. Live in the moment that I'm outlining for you on Wednesdays and on the weekend. Because the things that I am anticipating happening, okay, I already know what I'm going to talk about the next review. So you're seeing it as I outline it, and then it pans out. And then when it pans out, I get you closer to understanding why I knew it. But because I can tell you before it happens, it gives you something to anticipate. It's exciting. It's like I'm dangling a carrot in front of you and saying, okay, the euro dollar is going to do this. And then you watch, and every day of the week, you're waiting to see what happens. And now you're waiting for me to go on Twitter and say, it's so easy, caveman can do it. Here it is, another one. I'm done with that. I'm done. Okay. I've done enough of it. You guys see it. I don't need to do it anymore. But you're waiting for these things to pan out. And while you're waiting for them to pan out, you need to log how much time it takes for them to occur. Because something magical happens when you start doing this on your own. You expect these things to pan out in 5 minutes. And it doesn't work like that. And it creates impatience. It creates toxic thinking. It creates self-doubt. It creates doubt in the method. It's doubtful that it's going to pan out at all because you had set a time limit. Like you set an alarm clock saying, okay, ICT said this. Okay, so now I can see that happening in this other pair he's not talking about, but now it should happen by XYZ number of times, or this time of day, or this day of the week. And when it takes longer than that, you grow frustrated, and you start doubting yourself, doubting the method, and ultimately doubting me, when I never even talked about that market doing the very things that you were anticipating. You see how this creates a problem? And this is the mindset of the people that quit here because they have no sense of responsibility. They want to be responsible when they say things that they expected to happen, and they're smart. But the times, more often than not, that they're wrong, I'm the one that's to blame for that in their eyes. And that's not the case at all. I stick to 2 pairs primarily, and once in a while, Canadian dollar, or I'll look at gold. And I've already told everyone very openly, even on Twitter, I don't know what gold's doing right now. I don't know why it's waiting around, but it should go higher, should be going higher because of the weakness in the dollar. And no, your chart hasn't frozen. It's just me sitting here on euro, but I'm on a little bit of a rant right now. The stuff we have to do for payment processing and emails and stuff, it's so crazy this time of the month. I haven't really had a chance to be able to, let myself go. So it's obvious you can see it happening here. And I hope I don't, irritate anybody. But the things I'm saying are important. Even if you don't think they apply to you, they do. Okay. So, but the few things that every level member here should be doing is really focusing on what I'm expecting you to be looking at and where we're focusing at, because that's why I do the commentary. I don't need to do these things. Okay. They're for your benefit. And if you study them, the results of doing that very thing gives you the experience that you lack. Now, would you rather go through this mentorship without me talking about these things in euro and cable and dollar, and then you stumble and fumble through it, okay, never see these things before they happen, and then find it always in hindsight and say, okay, that's all there ever is to it. ICT can't see this stuff before it happens. No one knows what's going to happen. That's a toxic thinking individual. Everything about that person is probably a mess. Their personal life is a mess, probably. Their finances are probably a mess, okay, because they're toxic thinking. I don't have toxic thinking, Okay. I am purposeful in the way I talk. I'm purposeful in the way that I deliver the lessons. Nothing is on the whim. It's never, except for my rants. That's, I have things I have in front of me on my notepad that I want to tackle, like bullet points, but I don't have a script. I'm teaching and talking from experience. These are things that I've lived for 20 some years. And it's just a little annoying when you have someone that sends me an email, says, hi, I just started looking at Forex a couple months ago, and I found your YouTube channel, and I digested all your videos. Okay, I'm ready for the mentorship. And in the first week, the same person says, why don't you teach me how to do this? Why are you talking about this and not that? I'm going to tell you right now, and you know who you are, you're probably not going to do well here. And you probably should really reconsider whether you're going to be staying. Because if you can't dial back and just sit and be taught, you're not going to do well here. And you're not going to do well in trading at all, because you have to have, number one, patience. You have to be very, very focused in terms of controlling yourself. And you don't even know what you're learning yet. Like, your head's still spinning. There's so much stuff that's in front of you right now. You literally just joined. For some of you guys that just joined, like, you're watching videos, and I know what you're doing. You're clicking through them, and as fast as the one ends, you're going to the next one, and you're going to the next one. You're not learning that way. You are not learning. I'm telling you, I have so many people in this group now that they all tell me, even the 2016 August members that joined, okay, when I first opened this thing up in August 2016, they will all tell you they have missed so many things by putting off going through it all again. You got to go through this material a couple times, okay? A couple, not two, multiple times. And I promise you, you're going to pick up stuff. Like, it's going to feel like I made another addition to the video. And I don't do those. I don't have the time to do it, which is the reason why you see some videos have errors in them, okay? Like, there's one video, it's in August of, I think, the 2017 video. And a couple people always send me email saying, okay, this video stops playing at this, because I haven't edited anything. If I was wrong about something, it's still there. If I had a mess up in a spelling, it's all there, because that's part of the description. When I sell this mentorship, you are paying for all the old videos that are not doctored. I haven't done any of that stuff. Okay. If I'm saying something that doesn't pan out, you've seen it. If I said something that pans out, you've seen it. If there's a spelling typo, it's there. If the video was rendered and it had a little artifact in it, and it really ends at like some odd minutes, but then it looks like it plays for another 45 minutes or so, it's because there's something that, in my haste at the time, because I was going crazy with trying to keep the content delivery up and manage all this stuff, it was nuts. All those things, okay, are going to still be in the video. So just know that there's a ton of information that's at your fingertips right now if you're new. And you got to slow your roll, okay? Just go slow and start your study journal, and the questions that you have, write them down in your journal by topic, okay? Anything that has to do with intraday stuff, okay? Create an area where intraday related questions will be, okay? Anything on daily charts, anything that pertains to a daily chart, okay? It's probably a good way of doing it. Break down your study journal in monthly chart topics, weekly chart topics, daily chart topics, 4-hour chart topics, 1-hour chart, 15 minutes, 5 minutes, 1 minute, and then break it down into categories like price patterns, breakers, or stop loss. Where would that stop loss be? Well, in the beginning right now, you are thinking that you're going to be a specific style of trader, and that's probably going to morph into something entirely different years from now. But wherever your focus is right now, that's where the majority of your questions are going to arise from. And then, because of the nature of my teaching and the way that I teach it, I already anticipate the questions that you have. And it sounds, again, arrogant, but I have done this for such a long time. I've done it with so many people. I already know what you're going to ask. And right now, I'm saying stop with all this and get on with the teaching. But this is important, even for folks that are in a charter level, because you're still not doing the things I told you in month 1, which is go slow, go through it multiple times. And most of these individuals in my charter group that do not have it understood now, they will readily admit to you, if they're honest in front of you and they would tell you they didn't create a study journal. They didn't write down their questions. And then as the questions were answered, they go back and record them. And then at the end of the week, at the end of the month, read their own study journal. Read it like it's a book. Because what you're going to see is, by reading your own questions that are written out in your own handwriting, what order blocks should I be focusing on? What makes an order block high probability? These are all questions that you're all coming in here with. Okay, how do I know how do I know that the breaker is going to hold and not go up and create another high? All these questions are answered in the core content. I lace them through, because as I'm talking, like right now, I'm getting inspired to say things about the order block. Okay, because I already know what you're saying. Okay, he's going to answer it now. I'm not going to answer it, because I've already said it multiple times. What makes a high probability order block? But if you record your questions that you have in your uncertainty, and here's the thing: you want things to happen so fast for you. You don't want to waste time. You don't want to waste your time. You're paying me. Why should you waste your time writing down your own questions? I should already know the answers to your questions. I do. But here's the way they're answered. The most powerful way of answering them is to have you record them in your own handwriting. Okay? Because if you write them down, they're important to you. If you don't write them down, they're not that important. Think about that for a moment. Because if it's not important, if it's not so terribly important for you to spend your own time to write them down in a journal that you're going to keep and treasure, and then wait for that response and something I say or a lesson opens up your understanding by just, coincidence, apparently it's going to feel like, oh yeah, that's what that means. Then you go back to your study journal. So, okay, he said about breakers, this is this. Now I can see it. Let me go into the charts and see if that's really what I understood. And then when you start seeing it, boom, you have the aha moment. These epiphanies happen. And then what that does is, when you read your journal, your study journal on the weekend or once at the end of the month, when you read that question that you wrote, you'll remember the very day that you wrote it. And you'll remember that uncertainty that you had at the time when you wrote that question. And how long, okay? Write the date next to that question when you had that question in mind, when you wrote it. And then when you give your solution that you found in the mentorship, where I talk about that very thing, write down the date on that answer and see how much time transpired, okay? And how you still learned other things between those dates. And then when you remember the moment that you wrote down that answer to your own question, because of studying and being a part of the mentorship and community, it is an empowerment that I can't adequately describe. Okay? And this is why I tell everyone, I warn everybody, if you're lazy, you're not going to learn from me. It's simple as that. Because the only way you're going to learn this is to do what I just told you to do. And that's just it. And believe me, there has been hundreds of people quitting when they come in here on their first month and they hear me say that. That's why I belabor it a lot, because I don't want you wasting your time. I don't need your money, but I don't want you wasting your time. Because if you don't have your heart set on this, listening to my videos is not going to change it. You need to put your sleeves rolled up, put your nose in the charts, and do some work. And believe me, it's not going to be easy, and it's not going to happen fast. It never, ever, ever happens like that. I've never had a student come in here and blow my socks away and learn it faster than I've ever expected. No one's learned it better than anybody else. I don't have any special students that's the top of the tier. I don't have that. I have groups and pockets of where certain levels of trading in a certain style, I have certain people I know that fit the bill in that. But they're not super traders. They don't know everything. They don't excel in every asset because it's a personal thing. Which brings me back to what I was saying earlier. You don't need a whole lot to do well. Some of you are going to gravitate towards index futures, trading the S&P or the NASDAQ futures or, the Dow futures. You don't see me talk about that a lot, but it's the same approach to trading that than what we do with Forex. New people coming in, they want to see stocks. They want to see Bitcoin. They want to see crypto. Crypto, I don't understand. So you might as well forget that anyway. Otherwise, I would be talking about it. I don't know what I'm doing with crypto, so it is what it is. But all the other asset classes, they all follow the same model of this. It's the same stuff. They all have the same similarities. I had a question the other day. Does crude oil, I think I might be mistaken the market, but I believe the gentleman asked me, crude oil, does it have kill zones and such? And it's primarily a New York market. It's a New York market. The cleanest setups most of the time will be during the New York hours. Just know that. It doesn't mean that you can't see it in other quote unquote kill zones. It just means that it is a market that is really, really clean for the New York session. It's just the way it is. So there's going to be moves, obviously, that happen outside of that, but to note that it's a niche market for that time of day. Whereas like the yen and Aussie pairs are really nice, and they have really nice setups in the Asian session because that's their time of when the markets are opening up in that region of the world. So there's a lot of liquidity around there, and it's always been that way. So like I said, it is what it is. But anyway, I went off on all kinds of tangents with this, but this is the price you pay when I can't talk a lot. So it bottles up, and I had to get it out. So I answered a lot of emails, whether you realized it or not. I went through a lot of notes in that, just letting it all fly. But I will tell you this before we continue on, go to cable. The things that you're learning, I wish I could have learned this stuff my first couple years. I wish someone would have been around to do what I'm doing with you, because I would have not hurt myself on all levels, financially, emotionally, psychologically, physically. I wish I could have done what you're doing right now. I wish I could have had someone that I could trust, that proved they could see things before it happens, and why it does what it's supposed to do. Why should it do the other thing? And why is it going to do the very thing you're saying? I wish I had that. Okay. And I'm not inflating myself. I'm just saying that I have been exactly where you are right now. And I promise you this, you are in a very, very good position. I'm not going to bleed you out money wise. I'm not going to, fill your head up with a bunch of stuff that doesn't work. I limit your focus to three things: dollar index, euro dollar, and cable. And right now, these pairs are the most difficult to trade. I could have very easily said, okay, let's go over to trading commodities, and completely been doing all kinds of wonderful things in commodities. But I am teaching you exactly what you're going to endure as a trader, because you're going to encounter these things. Why should I take you away from the hard stuff? Because that's where you're going to lose your money. You're going to lose it. If you don't know what I'm teaching you right now in the last couple months, you are going to lose. And I mean blow your account and lose. Back to work you go. That's what it's going to be. I am teaching you exactly how I wish I would have been trained. Because like I said, I already know the things you're going to want to know and ask. And I know about when it's going to happen because of the way the content's delivered. I already know these things. I'm not clairvoyant. It's just because I've been doing it. It's a natural process, a natural order of things coming to, okay, well, he talked about this in this month. And then I know what you're going to ask me. Okay. And if you just allow that content and allow these weekly reviews and the commentary to provide those answers, because it does. It's just not happening on your time schedule. But I have thousands of you in here that I have to manage. Okay. And I can't have it your way mentorship. If every single one of you right now, and I'm not asking you to do this, please don't do this, but if every one of you said, okay, your most pressing question right now, what do you feel like is the hardest thing that's in front of you right now? And please do not send this email to me, because there's too many of you. I won't answer it. The most pressing question right now, if you all asked that and sent it to me in an email, I promise you most of that is already in lessons that you either glossed over or you're about to get into. And for the charter members, most of their questions are this: how do I deal with this? And how do I deal with that? It's not what makes this a breaker, what makes this that. It's the internal stuff. Okay? See, right now, the new people are all focused with the gimmicks, the little tricks, the little patterns, the little things in the chart. And they don't care anything about themselves and how they think. The charter members have graduated to the level of, okay, I know what I'm working with, but I'm trying to fix the thing between my ears because it keeps getting in the way. Your brain, the way you think, your thought process. Whereas if you would have listened to me in the beginning, you would have tackled that right from Jump Street, and you would have had the proper mindset going through the entire mentorship. See, it's both of you as a group are on opposite ends of the spectrum, and it's because you're not listening. Both of you, both groups are not listening. I'm not saying you're stupid because you think backwards as a mentor that's a charter member. I'm just saying this is what I warned you about if you didn't submit to it in the beginning, because now you're struggling. You are loaded. I mean, you got weapons galore, but you're like a rogue lone wolf. You want to go out there and start spraying everything, okay? You don't have the proper mindset. Not all my charter members are like that, but there's a few of them in there that are just wild. They just want to get down there and go crazy. They can't contain themselves because they're struggling with the mental things that he should have learned by going through the process of the mentorship like I taught it. These are all lessons. Just like what I'm talking about now, this rant, these are the things I'm reminding you throughout the mentorship. Okay, all the live sessions in September and October and November where it feels like I'm not doing anything, this is a waste of time. I had a guy back then in 2016 say, I'm quitting, I can't stand this. You're not teaching anything, because he wants chart things, the wiggle waggles, okay, the buy here to sell here. That's not going to help you. Okay, it's not going to help you. Just like the folks that are coming in, you're new. Okay, these are all things I said back in 2016. But I'm just saying it in a live session here. Well, not a live session, but a recording in recent, November 2nd, 2019, because it's still relevant. This is how you learn. You have to have fertile minds, okay? And if it's distracted, if it has its own set of expectations and you know how you should be trained, well, if you knew how you should be trained, then why did you come here? Do it on your own. You're smart enough to know that you can't do this on your own. That's what led you here. And you see the things that I'm teaching, they work. So how do I know these things, and when do I not trust them and sit on my hands and do nothing? That's what I teach. That's what the mentorship is. That's what everybody in all these chat rooms and all these things sharing things and trying to rob me, okay? They're not learning that because they're looking for the charts to tell them everything. It's not. You being here, paying for my time, and my experience is to guide you through this whole journey so you can get it the quickest way possible, not super fast, but the quickest way possible and done properly. I lead you through a whole process that is long. It's a long process. And people that are ripping me off and reteaching and rehashing things and saying they can't stand me or I'm too long and boring, but they're teaching my very concepts on their YouTube channel, just naming them something entirely different. These folks aren't never going to succeed either. Okay, they're getting subscriptions and that's it. If they could call the markets like I do, they would trade them, and they would make far more money doing that than a mentorship. And it sounds crazy, but it is. It's true. It's true. If you submit, if you do the things I tell you to do, it's going to feel like cult. It's going to feel like I'm brainwashing you, and I am. I'm not lying to you. I'm brainwashing you because you came in here with a dirty mind. You have all these retail thinking, okay? You want to be the next Instagram, big shot. You want to have all these cars and girlfriends and watches and rings and shoes that cost too much money and stupid things like that. That's what you come in here with, most of you, all the young guys. And that is the wrong mindset. That's all the stuff that you shouldn't be doing. I have a lot of money. You don't ever see me doing that. Granted, I probably showed a lot more of my clones than I should have. But the point is, I don't live that lifestyle to do that for everyone because I think it's stupid. It makes me look like an idiot. Okay, and I don't need to put that stuff on the internet just to prove I have it. I know I use all of it every day. I drive the things I have. I live in the homes I have. I go to the places I've been to. These are all things that I know because of experience. Not pretending. I'm not saying something that I don't have. I've never been that person. I've never been like that. But when you come in here with that mindset as a young man, And ladies, I apologize, but I have to deal with this. The gentlemen that come in here, okay, and they're on the younger side of the spectrum, they all want to be these ballers, these folks that just want to be about themselves, promoting themselves. And once you learn how to trade and you know how to find profits in the marketplace, you're going to have that phase. Even if you don't feel it now, you're going to feel like you want to just show yourself, okay? And one of two things are going to happen. One, you're going to do it and you're going to feel stupid and embarrassing. It's going to be embarrassing. Even though they may cheerlead you and say, oh, this is great, it's something that just won't feel right about it, okay? Because you have to live with the person in that mirror. And that's what happened with me. As a younger man on America Online, I did all that stupid stuff. And I didn't get the reaction I was wanting, okay? I wanted to feel significant on the basis of a more meaningful significance. Not because I was making lots of money, not because I was buying fancy cars, or that I was paying for more for anything and equating that as being better than someone else. Now more than ever today, the social media phenomenon has made people feel like they have to do that. And I can tell you, as someone that I can flex unbelievably if I wanted to, and put a lot of people on mental welfare if I was to do the things that they try to do. I don't need to do those things because it doesn't make me a better person. It makes me less of a person to do that. And for some of you, you're going to do that thing, and it may be the very thing that puts you over the top and makes you what you always wanted to be. You know, an attention hound. You know, there's nothing wrong with that. If you're generally a nice person, but you just like the attention and you're not really trying to destroy anybody else in the process or belittle anyone else, you know, more power to you. Go right ahead. But I'm going to tell you this. It's far more likely that you're not going to be satisfied by doing that kind of thing than finding satisfaction in it. So anyway, let's go over to the British pound, and we don't have too much to talk about this one anyway. I'm still looking for the buy-sell liquidity pool here. We saw they came out and mentioned they have pushed the Brexit vote towards the end of January. So, you know, honestly, I don't know. I don't know what's going on with this pair. I just know, looking at what I see here, where all this has been balanced, we had a reasonable retracement. I want to see it trade above this high. Should it do that? Buy-sell liquidity pool here. Now, we have the framework with the rate announcement for GBP for this week. That might be the catalyst that sends it up here. Okay, it could be extremely wild and an overreaction to see it do that, or at least make an attempt to get up here and start eating into the range between these equal highs and where we are right now. All right. There's really nothing in the lower time frames. All right, zoom in here on cable. This lower time frame setup that I did on cable this week, that was the rejection block, the last up close candle's close. That price action is what I was looking at as we were trading in on Thursday. So let's drop into a 5-minute chart and you'll see what I was looking at that time. All right, and here is the run here on Halloween, October 31st. The price run up in here, it rejected, and then came right back up into the rejection block, okay, on that daily chart. So that was the price action I was looking at, and then the removal of the sell side liquidity below the marketplace. That's what I was looking at. And then it came back down here deeper. I did an example, okay, of the trend lines, how it would basically lead the retail crowd thinking it should go up, and it just broke down and ran into an area of sell side liquidity. So that was the basis of that turning point. And last bit of business is our dollar CAD. Dollar CAD is the 4-hour chart. Let me go back out to a daily. All right, so high resistance liquidity run, really huge reaction here, and the 1.75 rate stayed the same for Canada, and we dropped down in the Fed to 1.75%. So our overnight rate is the same. It's on parity. And I don't think there's any reason for this thing to go higher. I would like to see it come back down, very minimum rebalance to here. If we get below the imbalance and the BISI fills in completely, the liquidity resting below here is just going to be most likely a supercharge of, if we get through this point here, the last portion of that range should not act as a high resistance area. It should be basically an equal low resistance liquidity run if we get below this low here. Up until that point, it still is a high resistance liquidity run. Back into a hourly chart and zoom out a little bit. We have this imbalance in here I mentioned on the daily. You may not have that gap there. It's the same thing whether it's missing or if it's there with a single candle that's not being shown here. The gap is still the same. We'll be seeing if they have a willingness to get back down there and rebalance. If we trade higher right from here, the attention goes to this imbalance there. So our SIBI would be the next level of buy side liquidity resting above equal highs, and then I'm probably wrong. Okay, and that's how I'm going to treat that. And gold, with the weakness in dollar, this is reasonable. We'd expect to see it trading a lot higher this week coming. If it doesn't, if it stays in consolidation, there's really nothing I can quote on going forward for a setup. I just don't think there's anything to look at. Otherwise, it should go higher. It should be going higher, and it's not. It's just pausing. So either this is leading up to a false run above here, and then dollar does go higher, and then gold falls out of bed, or this thing goes higher and gold could see the 1600s. Then dollar could be back in the 94s. Okay, so that, my friends, is going to be it. A lot of ranting in this one, I know, but it's all good stuff. It's all good medicine, and it's all meant for your edification. If you don't find the medicine and all that now, it's because you're too new. If you're here for a long time and you don't get the medicine from that stuff, then you're just too stubborn. Okay, and I can't fix that. So until I talk to you guys by way of anything going on in the market Monday, have yourself a pleasant weekend. Daylight savings time kicks in tonight. I don't respect it. I have to respect it for local things, in my global position on the planet. But in the markets, I don't respect it. Okay, a lot of people come in here with that, what I do with the kill zones. All mentor people know that I don't care about daylight savings time. So everything I see in the normal delivery of price, everything's expected the same way. I just created an elongated kill zone for people that don't think that way, or they can't get their mind aligned with that. They feel like they have to be set up with daylight savings time, even though not every country around the world respects daylight savings time. Because of that, I just keep it the way it is. So when we have daylight savings time, my stuff does not change. It stays just like it has been, like right now when we had market delineations in time on Friday. Monday, it'll be the same way for me. Even though daylight savings time will affect people's clocks, the money cycle isn't changing. That's my belief on it. Okay, so that's it, folks. Have a pleasant weekend. Be safe, and I'll talk to you all by way of the forum or by Twitter.